Greetings, everyone. This is Justin Cole, Senior Regulatory Compliance Advisor here at Mitratech Continuity. Welcome to our August 2025 RegFacts briefing, where we cover all of the action in the world of United States federal financial institution regulatory compliance. Expert analysis-driven reg alerts have been issued to our clients on the following topics or the following items in order to keep them up to date and on top of their regulatory change management processes. We had 13 total reg alerts during the month. A more detailed breakdown of this is that we had 1 final rule alert, 4 action alerts, 2 proposed rule alerts, and 6 information alerts. Across these 13 items or these 13 alerts that we published, the Regulatory Operations Center team, ROC, achieved an 86% compression rate, meaning that we took over approximately 185 pages of regulatory issuance content and compressed that down to 25 pages as a summary for our clients to keep up to date on all of what they need to be aware of. We had 70 compliance tickets solved during the month through our Reg Help feature, or another way to say our compliance help ticket and question and answer service. We had 27 state alerts issued during the month, and we had 2 enforcement action alerts issued, one of which involved an individual. Ask your account manager on how to add RegAdvisor state and enforcement actions to your subscription if you're interested. Delving deeper into the details of the reg alerts. First up, as mentioned, we had the final rule alert. The Federal Trade Commission increased the fees charged to entities accessing the National Do Not Call Registry. This is effective October 1st, 2025. Next up, we have our action alerts. The CFPB did an issuance as part of their withdrawal of 67 pieces of guidance, 10 of which were related to the Fair Credit Reporting Act / Regulation V. Guidance documents withdrawn within that area were 10. This is effective May 12, 2025. The Federal Reserve Board, with the concurrence of FinCEN, issued an order permitting but not requiring banks and their subsidiaries to obtain a complete taxpayer identification number from a third party rather than from the customer directly. This is effective July 31st, 2025. FinCEN did an issuance on convertible virtual currency kiosk scams. This is effective August 4th, 2025. It urged financial institutions to be vigilant in identifying and reporting suspicious activity related to such scams. Next up, the FDIC issued Financial Institution Letter 39-2025 to clarify that FDIC supervised institutions may use pre-populated customer information when opening new accounts. This is effective August 5th, 2025. We had it getting into our proposed rules. The FDIC is proposing to amend its guidelines for appeals of material supervisory determinations to replace the existing review committee with an independent standalone office to be known as the Office of Supervisory Appeals that would consider and decide such appeals. Comments are due on this September 16th, 2025. Another proposed rule alert from the FDIC was to increase certain regulatory thresholds to reflect inflation from the date of initial implementation and provide for future adjustments using an indexing methodology. Comments are due on this September 26, 2025. Going into our information alerts, the NCUA, National Credit Union Administration, launched a new web page providing tips for how examiners and credit unions can coordinate to improve the efficiency of the examination document request process. This is effective August 6, 2025. Federal Reserve Board announced that it will sunset the Novel Activities Supervision Program that it started in 2023 and return to monitoring novel activities through the normal supervisory process. It's effective August 15, 2025. The OCC, Office of the Comptroller of the Currency, issued their annual update to the Bank Accounting Advisory Series it provides additional clarity and removes superseded content. This is effective August 15th, 2025. The NCUA launched a new webpage to provide credit unions with resources on artificial intelligence related risk management considerations. This is effective August 19th, 2025. And FinCEN did an issuance on Mexico-based institutions of primary laundering concern. This is related to a previous issuance from June 30th, 2025. This is extending the deadline, or actually this one, the deadline extension is coming up later. This is actually for the issuing 4 new frequently asked questions to help clarify information about the orders. This is effective September 4th, 2025. And as I mentioned previously, the FinCEN is also amending its order to further extend the effective compliance dates of the 3 orders on the Mexico-based financial institutions. This will now be effective October 20th, 2025. This is in relation to these institutions being labeled a primary money laundering concern. That's it for this month. Please join us again next month to cover the issuances for September 2025. Thank you and have a great day.